So last week, Coach, I'm watching, I think it had to be CNBC, but some hedge fund had downgraded a stock that they obviously had on their list and moved it to the tactical
Mm,
underperforming list.
mm, mm. Okay, I see what they
And
did.
that word,
Yeah,
it triggers you and me, and I just
it's
think it's
it's
comical.
very important. Very
um,
important. We're
so
tactical. I mean, if you're going to use that word, it just means it's really it's just a really important watch list. I mean, it's just wow. I mean,
Yeah.
tactical.
And I happened to catch it on recording. I sent it to Coach Matt last week, and we were both just kind of laughing at it. So I figured I'd bring it up here this today on Queen's Court because I actually like the technical pattern of it. Now that it's actually found a bottom. So yeah, it was
Mhm.
underperforming, but I think we're finding a bottom on it. Give me block, also known as square, SQ, and let's take a
I'm
look at
sorry. I have
it.
like 14 comments in my head, and 13 of them are extremely sarcastic about the tactical bear watch list. And one of the 14 thoughts and comments in my head was also making fun of myself and my own naming of the watch list. In fact, one time I created an ESG watch list within the Tackle 25.
Uh-huh.
Um, I still want to punch myself in the face for that one. But, but, I don't have this game to be like tactical bear watch list. We just call it a
Listen.
bear watch list. Like that's what we call it. But
Yeah, I mean,
tactical, let's
what's a
go.
tactical underperform list? I
You know what? You're gonna have to ask the creative geniuses who created the watch list on that one. I don't know what it. I think it's just a bear watch list though. I think
Okay,
that's all it is. Yeah.
all right, okay. Well, give me square.
All right. Was Square the one on the tactical bear watch list? Was that it was Square on the tactical bear watch list? It was,
No,
wasn't it?
I don't know. Was it?
I know if it was, I say we buy it just for that reason.
Well, they called this the tac. They were taking it off because they were putting it on their tactical underperform list, wherever this hedge fund was.
Okay.
But anyway, I'm looking at this going that 50 zone, 50, 51, 50
Mm.
zone there. That bottom there looks mighty nice, and now that we're regaining those moving averages, we've regained the 9, we've regained that 50 on the weekly. I still want to see a little bit more confirmation. I want it to get above that 20 on the weekly, but I kind of like where it's at post earnings and that open space that it's got if we get that breakout. So I'm looking at this either way, and you can give me I want you to give me your technical read, and then I also want you to give me your thoughts on whether I should go bull put underneath 50 or go directional.
Okay. We're talking a little bit about software, correct? Infrastructure technology.
Yes.
Um, Out of favor right now,
Mm-hmm.
right?
Mm-hmm.
The leader of this space is one of the generals called Microsoft.
Mm-hmm.
That is Microsoft. Bear
Mm-hmm.
downtrend with some slowing momentum, a little bit of a deep retracement. That's man, look at this. Look at this over the last month or so of Microsoft.
Just
Somebody
very,
analyze that nonsense.
yeah.
Like I like other than a bear retrace here, I mean double top, volatility everywhere, uncertainty galore, just not a clear picture on Microsoft right now. Oracle, ORCL, second leader in the space. Nice little bull flag coming into the 200-day. Little bit of volatility here today against the backdrop of the market. Adobe, another big dog in the space. Choppy reversal here with excuse me, with an origination point right around 275. The one that stands out, I'll get to Square here in a second. I'm just kind of going showing
Mm-hmm.
what Square is in, because
Yep.
it's not just Square here, right?
Bunch of them.
VMware, BMW here. Kind of like VMware. Wish this blue little icon wasn't there. Like the increase in support, horizontal resistance against a 115, 200 daily here. That looks pretty decent on VMware. Now into Square. Square a little bit more closely aligned with, I would say, the high beta growth areas of the market
Mm-hmm.
versus the Microsofts, Oracle, Adobe's of the world,
Yep.
right? And so I would definitely say Square is that high beta area of the market that is very similar to ARC. And so when you're looking at ARC here, obviously one of the bigger concerning areas of the market right now, kissing up against support. That's breakdown potential there, and that's also a potential shorting opportunity. But remember what I said earlier in the halftime report. Some of the things that are related to ARC, you're really looking at a separation of the ones that are fighting with resistance right now. And if
Mm-hmm.
ARC holds support, those ones fighting with resistance will most likely see a little bit of relative outperformance, whereas the
Mm-hmm.
ones fighting on support will just get carried up to resistance, right?
Yep.
Versus on the bear side, if they break down, those ones fighting resistance right now, they just come down and they stay
Yep.
within the ranges and yada yada yada.
Mm-hmm.
And so the most likely scenario I would say is probably slightly over 50%. We don't see a breakout here in terms of
Mm-hmm.
the Square breaking out. But if
Mm-hmm.
Square does break out, it's on the backs of ARC holding support. Does that make sense?
Yep. Yep.
Okay.
Absolutely.
And so when you're looking at Square here, and again, you don't have a united theme in this space right now. It's like some like Oracle and VMware kind of fighting a little bit of top shelf reversal. Adobe, Microsoft volatility at the low prices. Square quietly between 50 and 60, a 20% range, looks to be slowing its momentum down, which is a good thing in reversal analysis, quite frankly. And
Mm-hmm.
so it's not one of those scenarios where, when you ask a top-down analyst like myself, what's the market doing? Okay, let's attach ourselves to that trend. What's the
Mm-hmm.
sector doing? Let's attach ourselves to that trend. What's the industry doing? It's really a mixed picture right now when it comes to the NASDAQ, the technology sector, and the
Mm-hmm.
software industry. And then you get into Square. And so in the NASDAQ, you're looking at, okay, at best, choppy volatility and underperforming everything. Technology, one of the biggest problem children in the market right now. ARC high beta growth, the biggest problem child in the market right now. Square outperforming those to a small degree. This
Mm-hmm.
is a bet on ARC holding support,
Mm-hmm.
is what it is. And what you like about it, Am, is if it does hold support, it could drive up in price 10, 12, 15 points, and you're not even, and that would just be another 3 days in end in Y, quite frankly, for high beta growth. So it's one of those environments where I'd say, Am, I don't like your probability here.
Mm-hmm.
And I'm speaking pure directionally here.
Yep.
I don't like the probability here. I think there's better trades, but there might not be a better trade with the potential reward of getting back up into the 77 type level, which is a 14 15 point movement to the top side. That's a home run potential. And so if you're a baseball player and you pick up the big stick and you try to hit a home run, you can strike out a little bit more, and you got to go in it with that mindset here. That if it doesn't work, you're willing to risk the trade, which means I like fixed risk. Okay,
Yep.
I like fixed risk, and so open-ended risk graphs, long stock, long call. I like a little bit more fixed risk here. Bull call, bull put. That's the debate here. Bull call, bull
Mm-hmm.
put. Personally, I any of you theta cheaters want to lob a bull put? I say that
We
with
have to be
love
cheaters.
and
Listen.
affection. I say that with love and affection because I'm jealous of you theta traders this year. But you get my point. Yes, you can lob a bull put spread here because of the outperformance here and feel pretty comfortable with that. You come into the market, you work out a little bit of time frame. I'm just going to spot check some. You know what I love about Queen's Court is you never tell me what we're going to talk about, so I just have to like figure it all out in front of the entire community. So appreciate that. But when we're looking
Well,
at the
I'll tell you what I'll tell you what I was
yeah,
looking at, and then we'll see whether yours is. Oh, we'll compare both.
okay,
So go ahead and throw yours, and then
okay.
I'll tell you what I was looking at.
All right. So first and foremost, I think you probably want to get underneath key support levels. I think
Mhm.
that is number one most important here. You got to pick your number and get underneath that number. Let
Yeah.
that number fight for you, and that number's got to be 52. You got
Mhm.
to be under 52 here. And so when you're coming out to the market, the time frame is going to really depend on how far you need to sell underneath. And so can you sell underneath 52 with 31 days left in a contract? Absolutely. You got an 18 delta, 52 at 50, you got a 14 delta. I don't mind a 50 by like 48, $2 spread here. I don't mind a $3 spread here. $5 spreads, it can be done, but on a $50 stock, they're not as popular. You typically tighten that up just a little bit. If you want to work out to the monthly time frame, the number one reason you would do that, work out to the monthly instead of the weekly, is the liquidity in the options market is significantly higher typically in monthly options. As you can see, that 50 contract here has 4,500 open interest. We come out to the weekly here, that same 50 contract has 82 open interest. And so
Mhm.
so 7 days, why not? Type scenario. And so I'm gonna, just because of the liquidity, because of some of the delta ranges around that 50, I like coming out 38 days here. You might not be in the trade 38 days on a bull put trade, especially if the stock goes up 10 points. You're out in this in like 4 days here.
Yep.
And I like the 50 handle. Let me come back out to my deltas to confirm. I like the 50 handle. It's a 16 delta contract. You can sell the 45 here with 38 days. That creates a 5-point spread. If you wanted to tighten it up, you could do a 2.5-point spread here. I don't mind the 5-point spread on the 38 days. I didn't love it on the 31 days. And so you got a 5-point spread or a 2.5-point spread. Honestly, you're probably sixes on them both. I would say the 2.5 spread probably a little bit better, but again, I'm sixes on those right now. But I do like the 38 days, and I do like the 50 handle on the sell side equation. What you wrap it with on the bull put side of the equation is just how aggressive you want to be, 47 versus 50. Excuse me, 47 and a half versus 45. But I like the 38-day contract and the 50 on the sell side. On get it under support. Get that upper band of your spread either at support to work for you or slightly under support. We're under support here at 52 support. We're selling the 50, going to come into the 47 and a half contract to create a 2.5 point bull put spread. That's on the theta side of the equation. On the delta side of the equation, I like fixed risk here. That's the bull call spread. So you're looking vertical spreads here. Whenever you hear the phrase fixed risk on the option side of the equation, typically we're looking at a spread, bull call, bull put type verticals. The bull put is what we just talked about. 73 days stands out to me. It's slightly north of the 60 handle. You know, Tyler and Greg, whenever they're doing trade masters, they'd be pitching 38-day contracts because they're very aggressive traders. This is a bull call spread. I think we're fixed risk. Let's get a little bit of time here, because again, markets don't trade under your time. They trade under their time. That you don't get to tell the market when to make the move. More time is typically a little bit better. So I do like the 73-day contract, and I think we can go a little bit. Currently priced at 62.80. I think we can go a little bit out of the money here. I know that 65 contract as a 53 delta would suggest it's in the money. No, this is ARC relatable instruments. These are high beta stocks. These things are crazy sometimes on the option side of the ledger. Let's work out a little bit out of the money here, and let's go out to 65. Let's kind of sell that 80 contract against it. I like a 65 by 80 contract. That brings in, if you look at it, the 65 call and the 80 put, excuse me, the 65 call and the 80 put. I will fix that. I'm hitting too many buttons. All of a sudden, I got like 4 things I'm doing there. Oh, I'm going old school here.
Oh
Make fun of
boy.
me. Make fun of me later.
I'll make fun of you.
Later. Not live. Later. You're lowering about 35% against the cost. That's pretty decent as well. I like them both. If it were me, probably like the bull call side a little bit more, but I'm also a delta trader versus a theta trader, so I'm typically gonna side with the directional trade. I like them both though. Either one's fine. Just again, the only recommendation I would say in this environment, the one thing you got working for you is Square is outpacing ARC. It's outpacing a little bit of the aggressive side of the equation. If ARC holds, both of these trades work out, quite frankly. If ARC doesn't hold, the bull call doesn't work out, the bull put might.